Hello, this is Taking Stock. I'm Greg Miles, sitting in for Pim Foxwell. China's volatile stock market jumped the most in 6 months today. On speculation, the government is ready to take steps to support equities after last month's sell-off pushed stocks into bear market territory. Now, Joseph Meuse of Belmont Partners specializes in helping bring Chinese companies public in the U.S., and he also happens to know a lot about the Chinese market. And welcome.
Thank you for having me, Greg.
Let's talk about the Chinese market first, because most people are focused on that in terms of where they want to put their China dollars in terms of equities. Okay. The Shanghai index up 56% year-to-date. But pulling back 18% in August. Frothy or a chance to buy? What's going on?
I would never deploy my capital into the Chinese market. If I'm looking to invest in China, I would do it with securities listed here in the U.S. It certainly is frothy. They just had an IPO that went off at 60 times earnings. I would much rather, there's not a lot of opportunity there to make money. It's not going to go to 120 or 150. You can buy Chinese companies listed here in the U.S. at a PE of 10, 15, and that's where the opportunity is.
And also better disclosure.
Absolutely.
Right? Because they have to list according to NYSE rules, et cetera, right? So you know what you're buying.
Excellent point. Excellent point.
Okay, let's talk about some of the stuff where you're supposed to know what you're buying, okay? Some of the stocks that you recommend. One of them is there's a bunch of stocks that are listed in the United States, right?
Correct.
One of them is China Fire and Security, CFSG. They design, make fire safety products for the industrial market. In China, about a 418 million market cap, up 122% to date. That sounds frothy to me.
You're still talking about a company that's trading at a PE of less than 20. They are one of the leaders, if not the leader, in that market. If anybody's been to China, they know that they have not historically spent a lot of money on fire security, fire extinguishers, fire-related products. They have some great
infrastructure.
Absolutely.
Infrastructure.
Absolutely.
Okay. Let's talk about OKL Stores. Okay, it's a supermarket chain, market cap, very small, 94 million, up 80% year-to-date. And ask our viewers again, this is like a stock more for an individual investor, not a big corporation.
The key to investing with these Chinese companies, in my opinion, is getting them right before they uplist from the over-the-counter bulletin board to the Amex or to the NASDAQ. QKL, I think, is really interesting. They've got grocery stores. There's no major supermarket chain in China. They're trying to become the first. They're doubling.
The first Stop and Shop, you mean the first?
Yeah, first Safeway, first AMP, etc.
Okay.
So they're growing at over 100% year over year. They're trading, I believe, at less than a 15 multiple. Very much undiscovered on the bulletin board, QKL. There's a need in China to have mainstream supermarkets the way we have it here in the U.S.
They also look like a potential takeover target. If somebody wants to come in and get into the Chinese market.
Certainly cheap enough. Again, a company growing at over 100% a year, and they're trading at a multiple of 15. That will not happen with this company once they uplist to the NASDAQ or to the Amex.
Okay. Now, I skipped one stock that I want to go back here. Sounds like an African animal, but it's different. It's Rhino International, ticker RINO. They design, manufacture, and install wastewater treatment. No, this is, again, kind of an infrastructure company, 339 million market cap. Tell us about that.
Infrastructure deal. They have government contracts. They're in a space that, as we've been reading in the news, certainly when the Olympics were around, that there were environmental issues in China. They're one of the leaders in the wastewater design, manufacturing, servicing space. This company traded at $2.50 in April before it uplisted to the NASDAQ. Now it's at just shy of $15. Still trading at less than an 11 PE multiple, which is amazing. Year-over-year growth, again, 100%. You know, you're not finding U.S. companies that grow at that rate that trade anywhere near a 10 or 11 multiple.
Let's go to another one. It's L&L International, ticker LLFH, okay? They invest, operate in energy coal mines in China, up nearly 300% year-to-date. $89 million market cap. Again, it seems to me if I was one of those groups that was concerned about fairness, and job safety, I would want to invest in one of these stocks, right? Well, so this is coal mines in China.
That's right. So most of the electricity in China comes from coal, and there are probably 900 million people in China who don't have electricity yet. They're just now getting online. So the future is bright for a company like L&L. What's great about L&L is they just announced that they're in the process of uplisting to the Amex. Once they get to the Amex, they're going to have some more institutional exposure. Stocks going to have some liquidity. That's the arbitrage.
Okay, what are the red flags that I should look for in these stocks? I mean, you described 4 that you think are very strong, okay?
Right.
But if I'm out there looking at several dozen, potentially listed in the U.S. markets, what are the red flags that tell me to stay away from that one?
Find a good mainstream auditor. Look at the SEC filings for the public company. Find an auditor that is respected, that does a lot of this. Call the company. Make sure they have a U.S. office. I say one of the most important things is to have a CFO who lives in New York full-time, right? He's a bilingual PRC citizen who lives here that you can pick up the phone and talk to and ask questions. That shows that the company's committed to the process. Make sure that they're financing whoever they got money from, whatever institutions they got money from, that it's not a toxic financing, that it's a reasonable financing and a long-term financing.
How about an indirect influencer? You know, there have been some news reports out expressing concern that the way the Chinese government reports its GDP or economic numbers are inflated. Are not accurate. Not so much because I think they're being dishonest, they have a different methodology, but nonetheless, when you're looking at this whole group, they're tied to the economy and infrastructure and make these government numbers make the economy look stronger than it is. How do you deal with that as an investor?
So it's not quite what you're asking me, but I'll tell you, I think that China up until recently has been understating their GDP. I think China's been growing at a faster rate than what they say, so as to avoid any more conflict with the U.S. The great thing about these deals is they have some government influence, but they also have a lot of private customers. They're all audited, PCAOB, SEC qualified auditors. So the numbers are very safe and secure, as you said in the beginning.
Joe, we got to go. Hope we can come back and talk to you more.
Greg, thank you very much.
Stocks. And we'll check to see if those stocks are up when you come back.
Okay, great.
All right. Thank you very much.
Thanks, Greg.
Joseph Meuse.